All right, good afternoon, guys and gals. Testing 1 2 3. Testing 1 2 3. How's everybody doing today? Type a NYE. NYE in the chat. You can hear me, please. Type a NYE in the chat if you can hear me. Testing 1 2 3. That might be a little bit long, so how about type a D in the chat? Type a D in the chat. There you go. Nobody wanted to type NYE for New Year's Eve, even though we're not quite there yet, but we're getting close. All right, guys. How you doing today? We're going to get started here in just a few moments. Looks like sound is good. Let me share my screen here one moment. Anybody have any plans? Anybody have any big plans for New Year's Eve? Maybe sitting around with a mask on or something. All right, just about to get started here. Going to Times Square, huh? So they're allowing people to go. All right. All right, can everybody see my screen? I thought you may have just been kidding. All right, can everybody see my screen? If so, we'll give everybody a couple more seconds here and we'll get started. All right, I think we're ready. All right, gang, let's go ahead and get started here. We're just a couple of minutes past the hour. First off, I want to say welcome. Thanks for joining. My name is Silas Peters, founder and head trader of Seasonal Swing Trader. You are here to see top tools for catching corrections in major moves. If you aren't, you may be in the wrong place, but if that's what you are anticipating, you are in the correct place. So first off, I just want to say welcome. I want to thank you for your time. We did this presentation last night. Was very well received, but we had a lot of people that couldn't attend. Just understand that life gets in the way. You had other things, other obligations to attend to, and we were able to go ahead and squeeze another presentation in this afternoon. So I want to say thanks. I'm glad you were able to make it. We're going to spend about 60 minutes or so today. Take some notes, ask all the questions you want during the course of the presentation. I'm not ignoring anybody. I want to make sure I get through the presentation, teach you my strategy, and then at the end of the presentation, I'll answer all of your questions. We'll look at some charts and all of that good stuff, and then you can be dismissed. I know everybody's got things they got to do. So appreciate your time today. If you're here, to me, it shows me that you're serious, you're ready to learn up, become a master at a high probability strategy that can hopefully carry you forward and take you into the next year fully prepared. So bonjour from Paris, Jean-Louis, welcome. Before we begin, we must always start by our risk disclaimer as required by the regulatory governing bodies and our attorneys. Past performance is not necessarily indicative of future results or substantial risk of loss associated with trading. Only risk capital should be used to trade. So Cliff Notes version of this means don't trade with your rent money, your mortgage money, your milk money, your child's educational funds. Trading is risky. You can lose money in trading. Now's the time you want to shut everything down, remove all of your distractions. That means closing browser tabs, logging out of Facebook, putting your phone on mute, hushing the crying baby. We're going to be together for about 60 minutes or so. Even though we are recording this, I cannot guarantee there'll be a replay. So you want to make sure to listen closely. All right, now that everybody has shut off all the distractions, I'm going to introduce myself, or formally introduce myself once again. Simply put, I'm a husband, father, son. I love hanging out with my family, whether it be at the beach, on a boat, hiking, on the golf course, really anywhere outside. I spend a lot of time working, a lot of time in front of the screens. So I do love to get outside and enjoy the great outdoors when I can. Pictures of my family just to show you that I'm a real human being here with my 2 daughters and my wife, and my dog snuck all the boat there, and me at our lighting of the Christmas trees in downtown with a very, very sad attempt at growing a mustache. So I catch a lot of heat for that, but hey, it is what it is. It's wintertime, right? Got to stay warm. So that's a little bit about myself, just to personalize it a little bit more. And want to ask you, like, how did I get here? How did I get to where I have the privilege of speaking to you today? So in college, and if you haven't figured out, that is the great University of Alabama there in Tuscaloosa, my alma mater, where I majored in investment finance and economics, but I had no idea where that was going to send or land me. Fortunately, one of my dad's golfing buddies used to be an ex-wheat trader in the grain pits of Chicago. And he and I were playing one day, and we started talking and bantering back and forth about what I'm going to do. I had absolutely no clue what that was. And he started telling me the stories about his experience in Chicago. And I was immediately intrigued. I was enamored by all things Chicago, from the trading, the pits, the screens, and just Chicago in general. So what did I do? Well, needless to say, I was a bit green on the sleeve. I sold my car 3 days after I graduated. I rented a U-Haul, and I drove to my new digs in downtown Chicago. Right here, a tiny studio unit where I signed a lease on the 23rd floor of Marina City, or the Honeycomb Towers here overlooking the Chicago River. I think I was about right in here somewhere. And I was directly above Smith & Wollensky Steakhouse. Could barely afford a Fiji water there at the time. Had House of Blues right here below. Some good music. Had Harry Carey Steakhouse a block or 2 behind me. Really, really wonderful experience. And actually, the same day that I moved in, I took the U-Haul truck back to its depot, and I hopped on an Amtrak train, and I scalped some tickets, some weekend tickets to the U.S. Open at Olympia Fields in Wisconsin to chase Tiger and Phil around. So you could really say that was kind of my first trade there in Chicago. As soon as I bought the tickets, the guy immediately disappeared, and I thought that I was about to get burned, but fortunately they did work. But back to my journey, or my career path, if you will. My first quote unquote career entailed this, and I want you to picture this. So I was working the Asian, European, and early New York session trade desk. And you remember when I told you I sold my car? Well, this picture literally could be me walking to work at some time around 6 p.m., 2 a.m., or if I got off early, maybe 6 a.m. I remember on numerous occasions me walking down the middle of LaSalle Street right here, nobody but me and a snowblower in the entire city of Chicago, walking down LaSalle, facing the Board of Trade and the God of Grains up here, and then getting into the Board of Trade and the temperature reading a solid negative something degrees. I remember when the teens were like a godsend of warmth. We got into the teens, or maybe even the 20s. Hell, it was getting warm, so we welcomed that kind of weather. Remember, I'm from the deep South, where there's a lot of humidity, so this was certainly a wake-up call. So I did this right here for a few years, working at the Board of Trade, handling some serious size trades across the Board of Trade, CME, NIBOT, NYMEX, London and Asian exchanges for our hedge fund, as well as banks, CTAs, trading everything from corn to copper to hogs, euro dollars, Japanese government bonds. It's an incredible learning experience, both from the markets and trading, but as well as the Chicago big city life. But I decided to head back south when some other opportunities opened up. And that's when I like to say went truly corporate. I went from the fast-paced and somewhat stressful hedge fund trade desk to slower paced life, managing equity and fixed income portfolios and other investment management roles right here in this building. And to me, that was extremely boring, but it was the safe route. But I missed the action and the excitement of the pits, the tape, the screens. So through some additional context, I was led to a day trading firm where I helped run operations, execution, trading education, to then running some brokerage, futures brokerage firms and IBs, and then ultimately working in a family office serving ultra high net worth individuals, doing each of these things right here. So it's safe to say I've seen a lot of the spectrum in the finance world, but honestly, I was just not that happy. I still miss trading, the trading world, me sitting in an office tied to a desk, looking out a window, and of course, dealing with typical corporate red tape was just not in my blood. I was just not cut out to sit around and BS near the water cooler, just not my personality. I wanted to get back to the markets, to the charts, to the trading, and while I was still trading during this time, I truly missed being in the weeds of the markets, following charts, doing analysis, and so on. So I left the corporate world and I started Seasonal Swing Trader. And it's here where I publish research, ideas, and analysis to my followers. And it holds me and our community accountable each and every day. And then in 2020, we also launched our registered investment advisory firm, Blue Marlin Advisors. So we're very excited about that. Now, my journey as a trader wasn't always easy. There were certainly some painful lessons to be learned. I grew accounts, blew accounts, grew accounts, blew accounts. I learned very quickly I was not a trading god. I was not above the market. The market did not care what my position was, did not care about my opinion or what I think it should do. What does that mean? Well, it meant blown accounts, emotional trading, poor risk management, acting like a gunslinger. But these are all battle scars. And in this workshop, I'm going to attempt to help you think smart, think logical with a proven price action strategy and plan so you can avoid the many mistakes that myself and I'm sure many of you have made as well. Bill G says sound is no sound. I just want to do a quick audio check before I continue. Hopefully that's just a unique situation to him. Can somebody give me a couple of sound checks? All right, thank you. Charles. All right. Thanks. All right, we're gonna keep going then. Let me type him F5 or refresh. Boom. All right, there we go. So why are you here? You know, let's talk about you. Why are you here? You want to have a reliable pattern for all market conditions. You want to have a strategy for all asset classes, and you want to be agnostic of market bias. In today's markets, it's just really imperative to make certain that we have a strategy that can trade both ways. Yes, the market has just gone up and up and up. Seems like it's never going to pull back, but let me give you a warning. It will pull back. I don't know when, but it will pull back, and it will probably catch some people off guard. So we need to employ strategies that can profit during up markets, down markets, and sideways markets, and do all of this without guessing. So today I'm going to show you a pattern that results in trend reversals. I'm going to show you the point where a trend is likely to reverse, and I'm going to show you a pattern with the least risk and highest reward. So if all that sounds good, let's continue. Are you ready to learn a strategy that is not only low risk, high reward, but also works in all markets, all time frames, all asset classes, all market conditions, and all styles? If so, that's good, because I don't want to sit here and teach you a strategy that only works on a, say, 1 minute Bitcoin chart or a weekly Facebook chart or a 4-hour crude chart. I want to show you a simple and straightforward strategy that works in any market, in any condition, whether it's ranging, consolidation, contraction, expansion, low vol, high vol. I don't care if you're a tick trader, a scalper, day trader, swing trader, position trader. If you trade the underlying contract, call options, put options, debit spreads, credit spreads, reverse, crouching tiger, hidden dragon, I don't care. What I'm going to show you is powerful, and I'm going to prove it to you. Before we continue, it's very important that we cover the process. Has anyone here heard of Jesse Livermore? If you haven't, I encourage you to read Reminiscences of a Stock Operator if you ever get the chance. Google it on Amazon. You can probably pick up a copy for less than $10. It's a really, really great read. So a lot of you, pretty much everybody has, and that's awesome. It's kind of one of those mandatory reads if you're in the trading business. And so a question I often receive is, what do you think about the markets? My typical response is, I don't know and I don't care. That may be a bit harsh. Maybe it sounds ill-informed, especially when you're asked by friends or family members, but it's true. For the most part, I really don't care about the daily news that flow in and out of the market. I'm a trader that trades strategies based off probabilities. So we want to forget about market assumptions and focus and trade with high probability strategies and what is actually in front of us and eliminating predictions. We must realize that knowing what is going on in the news and knowing how to make money consistently are really two separate things. For successful traders, it's about your strategy, your logic, and your process. It doesn't matter what you think the market is going to do tomorrow. And I realize it's a difficult concept for maybe a newbie trader or even seasoned traders to understand. I certainly want to form my own opinions as well. I mean, who doesn't? It's human nature. But it took me a while to figure this out. It doesn't pay for me or you to try to absorb every financial story out there or slap every indicator onto a chart. All I care about is when the markets I'm following reach key criteria. But there's one more trait. Because if we allow probabilities, not talking heads, to define our next move, we need to possess and control one more trait, and that is patience. Because we as traders know that trade should never be forced. A forced trade is not a statistically sound trade. We are all, or most of us, or I hope most of us, are in this for the long game. And patience is expected if we wish to bring in profits over the long run. So maybe this sounds boring to the aggressive crowd out there, but I'm not interested in being a short-term hero who tries to catch or trade every scenario out there. I'm confident in trades that consist of key criteria that are setting up, and we're talking about extremely high probability trades. And patience is the key ingredient to the success of this strategy, and really all strategies. And again, I can't emphasize that enough. So what is a high probability strategy? Well, it requires patience with a disciplined approach. It recognizes that opportunities are made up easier than losses. You let a few pass you by, don't dwell on what could have been. There's always going to be opportunities around the corner. And then lastly, I've realized that the less I trade, the better my strategy will likely perform. And the long term is what matters. Thus, likelihood is what makes the high probability strategy unique and successful. So what indicators do I use? What is the secret sauce? What are the ingredients? Well, I learned early on to keep it simple. Pick a few indicators and try and follow them forever. I can't tell you how many traders approach me that want to follow daunting channels, market profile, GAN, Bollinger Bands, fib retracements. The list goes on and on. This high probability strategy uses price action alone plus one very common and basic or free indicator, along with a couple of pro tips to take advantage of sentiment and technical extremes. So I don't know if who here has seen Jerry Maguire. I'm not going to scream the way he did in the movie, but love it or hate it, this is a famous line. I can't show you the money. I cannot show you the money because I don't know how you're going to trade, but I will show you the opportunity. So let's get to it. It is, boom, divergence. Wow, what a new concept, right? Wrong. Who here has heard of divergence? Who has heard of divergence? Henry, I emailed you back, and I'll address you at the end. So divergence, very simple. Divergence is when the price of an asset is moving in the opposite direction of a technical indicator, such as an oscillator, or is moving contrary to other data. Divergence warns us that the current price trend may be weakening, and in some cases may lead to the price changing direction. So basically, it's an indicator of price being in disagreement. It's using any relevant indicator such as MACD, RSI, etc., It's an indication of a reversal or a continuation, but more often a reversal. Let's get into the brass tacks here. It can occur between the price of an asset and almost any technical or fundamental indicator of data. It's typically used by technical traders when the price is moving in the opposite direction of a technical indicator. Positive divergence signals that price could start moving higher. It occurs when the price is moving lower, but a technical indicator is moving higher or showing bullish signals. Negative divergence is the opposite, points to lower prices in the future. It occurs when the price is moving higher, but a technical indicator is moving lower or showing bearish signals. Why is it important? Well, because it's the earliest indication of a reversal to possibly enter a market. It's a good sign to exit a position, a good sign to scale into position, and it means that we're usually buying near the bottom or selling near the top. Hint, hint, this means that the risk on your trade are very small relative to your potential reward. Let's look at some visuals here. First one is what we call classic divergences, or sometimes called regular. Bullish divergence is when the price action makes a flat bottom or lower low and a higher low on the oscillator. Bearish divergence is when price action makes a flat top or higher high and lower high on the oscillator. So traders use divergence to assess the underlying momentum on the price of an asset and for assessing the likelihood of a price reversal. The market is making new highs, but the RSI starts making new lower highs. This warns that the price uptrend may be weakening. That's what we call negative divergence. Positive divergence is the opposite situation. So imagine the price of a stock is making new lows, while the RSI is making higher lows with each swing in the stock price. Traders may conclude that the lower lows in the stock price are losing their downward momentum, and a trend reversal may soon follow. Let's talk about hidden divergences. Just like regular or classic, we also have bullish and bearish. A hidden bullish divergence is when price action is making higher lows, but lower lows on your oscillator. This is what you would normally see in an uptrend. Hidden bullish divergence is telling us that the oscillator is recharging to go back up again, or is the continuation of an uptrend. Hidden bearish divergence is when price action is making higher lows and higher highs on your oscillator, and that's what we normally see in a downtrend. Hidden bearish divergence tells us that the oscillator is creating space to go back down again, or is a continuation of a downtrend. Let's talk about regular divergence. This is an example of regular divergence, or regular bullish divergence, and it's the most frequent. It's usually considered a sign of a reversal. If the price is making lower lows, low, lower low, and your oscillator is making higher lows, we have regular bullish divergence. We don't need a series of lower lows. We only need one low to be lower than the previous low. This low is lower than this low, and this can usually be found near bottoms. Now let's talk about a trend following type of divergence, which is hidden bullish divergence. If the price is making higher lows, low, higher low, and the oscillator is making lower lows, low, lower low, this is hidden bullish divergence. And this can be seen when the price is in an uptrend and indicates that the price may tend to go higher. Hidden or regular bearish divergence. It's the most frequent. It's considered a sign of a trend reversal when the price is making higher highs, but the oscillator is making lower highs, and it can generally be found at tops. High, higher high, high, lower high. See how that works? Hidden bearish divergence. This is a trend following type of divergence. If the price is making lower highs, high, lower high, oscillator is making higher highs, high, higher highs. This typically can be seen when price is in a downtrend and indicates that the price may continue its downward momentum. Let's talk about identifying trend strength. Let's consider the following scheme. So right here at point 1, buyers believe that the trend has recovered or a new trend has begun, and they want to make money. So they're opening long positions and they're driving the price higher. The trend begins to accelerate. as more buyers are jumping into the market. Once we start reaching point 2, buyers are taking profits. The trend starts to weaken. Buyers still dominate, but they're calming down a bit because they're afraid that the trend may come to an end. And at point 3 here, no more buyers in the market. The trend starts to reverse, and sellers step in and begin to dominate. Now, we can use tools to help recognize trend and trend strength. And one of those can be found with the popular RSI indicator. I believe the standard rule of thumb, if you will, is when the RSI rises above 70, the market's considered to be overbought. When the RSI falls below 30, it's considered to be oversold. And that's a great concept, but we want to use the RSI indicator in a slightly different way. Let's look at the same chart. 2 significant highs labeled A and B in this price chart, as well as in the corresponding highs in this RSI window pane below. The price chart, we see that B is higher than A. That means the price is still going higher. In the RSI pane, RSI window, it's just the opposite. B is lower than A. It means that the trend has weakened and is probably or likely to reverse. And lo and behold, what happens? Market actually reversed and sold off in a big way. Now, we've used the RSI in the previous example, but you can replace it with any momentum indicator, such as CCI, stochastic, MACD. All these indicators are derived from price, so there's really no better or worse indicator. It's really about preference. It doesn't matter what indicator becomes your best friend. Every approach is equally good, but we want to go back and focus on what matters, and that is the concept of divergence. But before we go into more chart examples, let's quickly recap here for context before taking a deeper dive. So bullish divergence, again, is when price makes 2 significant lows, but the second is lower. RSI is making 2 significant lows, but the second is higher. Bearish divergence, just the opposite. Price makes 2 significant highs, but the second is higher. RSI makes 2 significant highs, but the second is lower. So we previously defined that divergence is a discrepancy between price and indicator movement. Note here that we've now added the MACD to the chart down here. This is the MACD. So when price is making a new low right here, but the MACD is making a higher low, it's what we call bullish divergence, signaling that the trend is likely to reverse. This is classic or regular divergence. The black line on the price is sloping down. Black line on the MACD is sloping up. Now, the depth of the divergence is a bit more of a subjective term. When you look at this example, we see 2 divergence patterns, a bullish and a bearish. First one is nice, but the second one does not look as promising because the 2 peaks down here, or the troughs on the MACD, are not as significant. We consider a divergence to be deep if the MACD crosses the 0 line. And such a divergence provides a much stronger signal for a trend reversal. So let's talk about that. So in this chart, we see 2 patterns. First example is almost a double bottom, if you will. The second example has more defined peaking action. When we peak, the MACD crosses down below the 0 line, rises back up and forms a second peak, which is lower than the first, thus giving us our divergence pattern. And because it did cross the 0 line, this means that it is a higher quality divergence pattern. So now that we know the basics of divergence, let's look at ways we can approach divergence in a smart and methodical manner. As we have discovered, these patterns can lead to consolidation, corrections, or full trend reversals. And that's great, but we need a definitive plan about where to enter, where to place stops, and where to exit. Because with this strategy, you can make quick profits on small corrections or minor trend reversals, or try and capture major market moves. And when the trend reverses, it's every trader's goal to try and stay with that trend for as long as possible. So how do we do it? Well, we know that divergence is a reliable pattern. But sometimes chart patterns see maybe a double top. Elliott wave traders maybe see a shortened fifth wave, but they all refer to the same thing, the divergence pattern. This is what chart pattern traders see. This is what Elliott wave traders see. This is what we see. Most traders don't realize that MACD or RSI divergence is exactly what they're looking for. Our approach removes the subjectivity because the divergence pattern is well defined. So let's talk about entry. Let's talk about entry. How or where do we even begin to enter? So there's a couple of different ways we can consider entries. That is a simple enter on next candle open. So we wait for that divergence candle to close and we enter on the next bar or the next candle open. Hopefully you can see that. Another method is to wait for a candlestick confirmation. That is, wait for a bearish candlestick or a engulfing or reversal type pattern for short positions, or a bullish candle or bullish reversal for long positions. So we've talked about entry. Let's talk about the least fun or exciting aspect of trading, but by far the most important, and that is stop losses and risk management. So one could argue all day the best place to put a stop loss, but we want to keep things very simple and objective. So for a stop loss with this strategy, we can place just below the bullish divergence pattern or just above the bearish divergence pattern, and it's recommended you give it a buffer of a few ticks or a few dollars depending on what market you're trading. In this example, we see that the second turning point right here, or the point of divergence, can act as a minor resistance point from which price uses to retrace, and we are thus protected from being stopped out too soon. So we've covered entry, we've covered stop losses. Let's get to the fun part of trading, and that is profit targets. So our first goal is to make a profit before the market turns against us. We don't need to shoot for the moon, so we don't want to place the profit target too far. I've found that it's wise to place the profit target at a significant area of support or resistance, or what I'd like to call price structure. This keeps us from guessing an arbitrary amount of ticks or points. Here we can see the divergence valley is a good place for profit taking. Notice that we have very clear price structure at these levels right here, and price is likely to gravitate towards that area like a magnet. Now, it's no coincidence that prices have a reaction at these levels. So by taking profits at these levels, we can profit from patterns that result in minor trend changes or corrections. We can make consistent profits based purely on this exit technique alone. But divergence, as we know, can also lead to complete trend reversals, and we want to make sure we take advantage of those trends that can occur, which we'll cover here in a bit. Candles. Another exit strategy is pay attention to candlesticks. When we have a candlestick reversal pattern or an opposite divergent pattern that appears, it can serve as a good place to exit. These important reversal patterns can signal that the trend is likely to reverse or at a very bare minimum pause. If we get that reversal pattern appearing close to our first take profit level, it means that the price is likely to reverse or pause, and we want to close out, let's say, half of our position, and we don't want to wait until the price comes back and reaches our stop. Let's look at the next example. So in this one here, we can see that price, here's our entry. We can see that price lurched all the way up to the valley or our take profit level, but we put in a bearish reversal candle right near the TP level. Price retraced a bit, came back to that level a second time, reversed again this bearish reversal candle. This time it drifted all the way back down to our stop out area. So that's why it's good to not get greedy at these levels and close part of your position here. Close part of your position, move your stops to break even, and let it ride. Now, another great way to trade the strategy is by adding some moving averages. This is total personal preference. Here I've got an 8, which is the fast EMA, the green line, and I've got the 34 EMA, which is the red or the slow line. So the first look at this example shows that this candlestick reversal right here would be a good place to exit. And it is a solid place to exit, but there's room for improvement. We may have been stopped out right in this area, which was a great trade, but the trade continued. So when the price came up and bounced off of the slow EMA, the red average, we have a chance to re-enter the market and continue to ride the trade lower into profit, all by stair-stepping along the way above swing highs. So we've seen a few different ways about how to catch the quick moves as well as larger moves. The most popular approach that I see among traders is to exit at a certain number of ticks or points or pips. But as you know, every market and every time frame has different volatility. So it really makes no sense to go for some arbitrary number, say 100 pips, 5 points on the S&P, $7 on a stock, and so on, because volatility changes over time and it changes over time for each instrument. So the best way to determine your exits is by testing the strategy and learning that individual market's movement or rhythm. But there really is an easier or less subjective way. So let's recap what those exit strategies are. Structure, plain vanilla structure, using valleys and dips at significant areas of support and resistance. And then candlestick reversal patterns. So let's move on to false divergences. How do we filter these? We know that when traders are trying to jump in a new trend, they typically look for some type of confirmation. And we know that a trend reversal can be confirmed with a divergence breakout. And to many traders, that divergence is confirmed when we have minor support or resistance that is broken. So here is what I'm talking about. Here's that second confirmation, where some traders are looking to sell. We're actually looking to take profit. We're looking to get in here, take profits here. We're looking to get in here and take profits here rather than wait for that confirmation. There's nothing wrong with that approach, but with this approach, the entry can be a little bit too far away from the start of the move, which increases our risk compared to the profit. And our goal is to limit risk. We're not saying that this entry technique is wrong, but there really is a way to achieve more consistent profits, because where most traders are looking to enter, we're looking to make a quick profit. And I want to talk about chop. I know that there's so-called chop indicators and things like that floating around the internet. You don't really need any of that. This is a chop indicator already built in. Notice that the histogram here is choppy. It's quickly reversing up and down around the zero line. This can generate a long series of false signals. That's all you need. That is your chop indicator. But to prevent over trading, we found a way to recognize even clearer patterns. Our golden rule says that the signal line must be crossed by 2 peaks. So we look at chart 1 on the left. You see how the signal line crossed the zero line and came back to the second peak. In chart 2 on the right, we get no crossing of the zero line. So now back to the entries. If our goal is to enter as soon as possible after the pattern has formed. So our strategy gives a signal just after the MACD hook, or what I call the turning point. Only after that MACD hook has formed, you will recognize the second peak on the histogram. And this is where we recommend entering on the next candle open. It's a very simple, very mechanical rule. But I further fine-tuned this into an even more reliable method, and that's by using simple trendline analysis. Experience in backtesting has shown that trend lines can be used as a great confirmation tool. So when we're looking for a long signal, we simply draw a trend line on the chart by connecting the minor highs. We can place a buy stop order just above the trend line. When we're looking for a short signal, we draw a trend line on the chart by connecting the minor lows, and we place a sell stop just below the trend. So when the price breaks that trend line, we're in the trade. This entry is very similar to the quick entry method or that next candle open idea, but sometimes this protects us from the false MACD hook when the MACD turns again and then continues to fall. So could be a bit discretionary, but I found it's one of the more effective ways to enter on these types of signals. And here's another example, but this time to the sell side, we place a small trend line on the chart. We enter on a sell stop below the trend line or a confirmation retest of the trend line break. Let's recap everything we've learned. A high probability reversal strategy. We've learned where to enter, where to place risk, where to take profits, and how to filter false setups. But how do professionals trade it? Have you ever wondered why the markets turn against you when you start to jump on that trade and it looks very promising? It turns out the most tempting signal is likely a trap. As there are no more buyers to the market, move the market, the sellers start to dominate. As there are no more sellers to move the market, the buyers begin to dominate. Divergence masters know how to enter in the opposite direction just before the trend begins to turn. This is a quote I love. Yes, following the herd may work sometime. Think of the 90s tech bubble. Worked until it didn't. The 2000 real estate boom worked until it didn't. The crypto mania of the 2010s. But do you really want to be the one chasing new highs when you have a high probability strategy of selling them, or panicking at market lows when you could possibly be buying at substantial discounts with much lower risk? Of course you don't. And that is from the Zurich Axioms by Max Gunther. So when you trade this way, your winning batting average could be sub 50%. Yes, you do not have to be right 50% of the time. You don't even have to be right 40% of the time when your risk reward is overwhelmingly skewed in your favor. But here's some additional pearls of wisdom. The less you trade, the more money you're likely going to make. We want to filter the unreliable patterns and focus only on the strongest signals. And we want to use a customizable indicator that can deal with this for us, where all the process of recognizing these patterns in the chart are done for us automatically. We sit back and we enjoy the various exit levels, and we find out what suits our trading styles the best. But how do we do all this? Well, it largely depends on your style of trading. We can scalp on the 1 minute and 5 minute charts, look for swings on the hourly or the daily or the longer term time frames for position trading. You can trade any asset class or financial instrument you want, but you've got to be patient, because patience does pay. I really mean that. But how do we do that? Styles, too many markets, too many time frames, don't have enough time. Well, we've developed a time-saving solution so that traders can live their lives, not worrying about scouring through thousands of symbols, dozens of time frames, scrutinizing hundreds of charts, trying to determine if what they're eyeballing is actually divergence or not. We cracked the code and we simplified the process. But how? Well, who here is ready to find out and ready to start thinking and trading like a professional? Who's ready to stand up from the crowd? Let me see who's ready. We'll take a swig of water here. All right, absolutely, of course you are. Well, that's why I'm pleased to introduce Divergence Dominator Pro. DD Pro is a fully complete, comprehensive trading business in a box solution. Let me quickly guide you through what Divergence Dominator Pro is so you can immediately see how it can benefit your trading as early as today. What is DD Pro? We're going to get the turning point identifier indicator, what I call TPI, the DD Pro scanner, price action pro trading course, candlestick pattern recognizer guide, divergence cheat sheet, DD Pro trade journal, and the TPI fast slow line cheat sheet. But what is this? Great question, and I'm glad you asked. What all is this? The TPI auto plots divergence setups. It scans the markets to locate these turning points to trade multiple markets in multiple time frames. Who wants to see the TPI in action? Let me know. Somebody type in, can everybody see the TPI? You can now in seconds pull up your favorite chart, attach the TPI indicator, and bam, here is the TPI, a bullish TPI buy, a bearish TPI sell. This is a bearish divergence line. This is a bullish divergence line. Can everybody see that? I want to make sure everybody can see that. Here's another example. This is IBM. Here's a daily chart of the US yen. Here's a bullish TPI, bearish TPI, bullish TPI, bearish TPI. Here's a bearish divergence line, bullish divergence line, bearish, bullish divergence line. So we can now at a glance see major reversal turning points on any market or time frame of our choosing. Here's another example of a 5-minute chart of the pound. Bullish TPI, bearish TPI. What about platforms? How about Thinkorswim, TradeStation, NinjaTrader 8, TradingView, MT4? We attach the TPI to the chart and immediately start to see turning points. Here's what it looks like on Thinkorswim. We can see our bearish TPI in the pane below, bullish TPI, bullish TPI. Here's TradeStation, bullish TPI, bullish TPI, bearish TPI, bearish TPI. NinjaTrader 8, bullish TPI, bullish TPI, bearish TPI, bullish TPI, bullish, and bearish TPI. And then lastly, or not lastly, two more, TradingView, bearish TPI, bearish TPI, bearish TPI. Now lastly, MT4, bearish TPI, bearish TPI, bullish TPI, bullish TPI. Do you see these major turning points? But wait, we have to locate all those manually? Well, no. We built a scanner for TradeStation and NinjaTrader 8. We know that anybody that's been trading knows that divergences, or maybe if you just saw the presentation, we can see very easily with no questions that's one of the most reliable and profitable trade setups. But here's the thing, manually identifying these are difficult, they're time consuming, especially if you want to analyze multiple markets in multiple time frames. And that's where the TPI comes into play. It automatically detects the highest probability of a turning point in any market for you with the click of a button. Here's the TradeStation scanner. Here's the NinjaTrader 8 scanner. And now when you combine the indicator and the scanner, it's capable of identifying divergences across all asset classes, all time frames, chart types, whether you're a scalper, day trader, swing trader, position trader. But aside from the indicator scanner, I really feel like the crown jewel of this DD Pro package is my Price Action Pro trading course. This is a never before released course. This is my only full step A to Z trading course focused on trading pure price action. How to find and identify the most important areas to even consider being a buyer or seller in any market. Totally removing the uncertainty, all by trading in conjunction with the TPI. So do you want to quit guessing? Do you want to feel confident about your entries? Do you want to remove emotions? Begin to think like a professional, scale your reward and risk in your favor? have a solid trading plan? Well, if you do, then the PAP course is an absolute must. Because look, this is no big secret. Divergence has been known and used for decades. But now not only do you get a first of its kind tool, an indicator that locates high probability turning points on your behalf, the PAP course has all the solutions to help you with each and every one of these bullets above. And you get all this in a comprehensive step-by-step on-demand video module that you can watch over and over again. You're also going to get the Candlestick Pattern Recognizer Guide. This is not your grandma's guide to candlesticks. We know that there are dozens of candle formations or patterns out there. This is a short, sweet guide that only covers the most important candle patterns that you should focus on. You're also going to get the Divergence cheat sheet. This is also something that you can download and print. Great for those that like written descriptions and summaries that can help accompany all the video modules. So the Divergence Dominator Pro, you're going to get the turning point identifier for all 5 platforms, the DD Pro scanner for TradeStation and NinjaTrader 8, the Divergence cheat sheet, the Candlestick Pattern Recognizer Guide, and much more. But I want to ask, what is all this worth to you? What is all of it worth? You're able to profit in any market condition. If you can anticipate major market reversals, if you can trade on your time, if you had all the tools, the scanner, indicator, videos, training guides, DD Pro does all of the hard work for you. You no longer have to guess where to enter or where to set your stop and take profit levels. But it's very important to me to determine if this is a good fit for you. If you like trading or scalping on nanosecond charts, if you love to be stressed out all the time and have heart palpitations, if you get a thrill of blowing out accounts over and over again, if you have a gambling mindset and never have a clue where the market is likely headed, then I'm sorry, this probably is not for you. We can shake hands, part ways, and I wish you the best of luck. But let's determine if this is for you. If you're ready to think like a professional trader, you're ready to remove your gambling mindset, you're ready to get serious and treat trading like a business, and you're ready to kick emotions and focus and have confidence each and every time you place a trade, then this could be for you. And if this is for you, I have a very special offer for today's attendees. It's the Divergence Dominator Pro package. Now, the T.P.I indicators alone cost over $2,000. The scanner costs $1,500. The PAP course and all of its contents have a $500 value. The cheat sheets, guides, and bonus materials are another $400. That brings the total value of this DD Pro package to over $4,000, $4,427. But I am very, very proud of this indicator, the price action course, and all the other materials. I'm not going to charge $4,427. I really want to get this out to only those that are serious, that are tired of kicking tires, tired of jumping from system to system. We're not going to charge $2,999. I really want to make this available to those that are serious and are ready to see some real results. We're not going to charge $1,099 or even $997. As part of this live webinar special, we're pleased to offer this to the first 25 signups for a single one-time fee of $497. It's a one-time fee, seasonalswingtrader.com/top. Yes, that's a one-time fee. There's no renewals, no subscriptions, no annual billing. It's a one-time fee. You own it all for life. I'll put that into the chat. Offer link is seasonalswingtrader.com/top. It's almost 90% off the $4,400 value. You're going to get the indicator suite, the scanner set, the PAP course, guides, cheat sheets, all for a very low one-time fee. You own it for life, all platforms for life. And yes, we are working on a scanner for trades or thinkorswim as we speak. If that becomes available, if we're able to do that, that's going to be included in this package at no additional charge. And any enhancements that we might make, there'll be no additional fees or charges. It's all included as part of the package. I often get asked, Silas, how do you trade these setups? And I appreciate the question, but the easy answer is that it all depends. It depends on my overall outlook. If I'm thinking shorter to intermediate to more position based, what other positions I may have, the risk reward of the trade. But I mean, how do I trade? I like to trade credit spreads, primarily on equities and commodity options. I'll trade both debit and credit spreads on those markets. I also trade the underlying in futures and forex. But let me say that what or how I trade really doesn't matter. You should never be concerned with what I am doing or what somebody else is doing. If you have a question or an idea, shoot it to me. I'm happy to help. But at the end of the day, you are in control of your own account, how much capital you have, what knowledge you possess, your risk tolerance, and how much time you can personally commit. So let's look at this offer once again, and we're going to look at some charts. We'll look at your symbols. You're going to get the Divergence Dominator Pro package, which includes the T.P.I indicator for thinkorswim, TradeStation, NinjaTrader 8, TradingView at MT4, the DD Pro scanner for TradeStation and NinjaTrader 8. You will get this for thinkorswim if we can get it built out. And like I said the other day, thinkorswim is one of my favorite platforms. I use it all day, every day. So I'm pushing hard to get that done. It just unfortunately has some limitations compared to TradeStation and NinjaTrader 8. You're also going to get the Price Action Pro course on demand, DD Pro Candlestick Pattern Recognizer Guide, the Pro Journal, T.P.I Fast Slow Light Cheat Sheet, and the Divergence Pattern Master Cheat Sheet. Okay, Ted, the offer link is in the chat, seasonalswingtrader.com/top. Let's see. Henry, did I answer your question? Were you able to find that? Does it work on interactive brokers? The strategy works on interactive brokers, but the indicator is only built for these 5 platforms that you see here. Yes, you can trade multiple time frames at the same time. In fact, I do multiple time frame analysis. I teach that in the PAP course on demand. We'll probably shut this down over the weekend. We sold out last night. We opened it back up today. My support team will be around. He's supposed to be off this afternoon. He's going to stick around and manage any tickets that come in over the weekend. I myself will also be checking in. This is not a subscription. You own it. It's a one-time fee. Will work on Canadian stocks. Yes, it works on any market that you can chart. How often do they occur? That's an impossible question to answer. It all depends on the markets and the time frames, and as well as the movement of that particular market. It does not repaint. Hate repainting indicators. When I anticipate the scanner to be ready for toss, I can't tell you, man. We've been working on it since June or July. Very frustrating. I wanted thinkorswim built out first, and 1 month went by, another month went by, another month went by. I said, screw it, get it done for TradeStation and NinjaTrader 8. Then we'll go back to toss. And so now we're working on it again. I do not have a trade room. Mohammed, right now the package is built for, as you see it, the complete package here. Indicator, scanner. We don't have it separate. We'll see what we can do. If you could email me, Mohammed, email me at support@seasonalswingtrader.com. If you have questions, let me put that into the chat. Support@seasonalswingtrader.com. Boom, there you go. Hopefully everybody can see that. There you go, Mohammed. Yeah, so let's look at some charts, if that's cool with you. And we'll also look at the members area. Let's see here. Do you not see the email address in the chat? Let me see if I can pop that to you. Let me know if you see that. All right, guys, here is the members area. Computer's acting weird. There we go. All right, so this is the members area. Here's your indicator downloads. Here's your scanner downloads. Hopefully we'll see toss in here sooner rather than later. Installation guides. Here is your course module. All right. Here is your PDF guides and your DD Pro Trade Journal Excel sheet. What is the trade journal? It's just it is what it is. It's a trade journal that will help you keep track of your trades. Very important as you're developing a trade plan to track your trades. Go back and see where you went wrong, where you went right, and keep a nice history log of those trades. All right, yeah, let's look at. Let me see. I don't know how many have been. I don't know how many slots have been taken. My support guy is not around. I will honor your spot, Lou. You email me at support@seasonalswingtrader.com, please. All right, let's look at some markets. So nat gas. All right, what am I on right here? Hogs. So we have potential sell here, potential to buy there, potential sell there. You want to look at nat gas. Nat gas has some wicked volatility the other day. So we had a sell here on nat gas. We had a nice buy here at structure right here, this area. You can see that green arrow. And then we also had a nice buy at structure right here and a trend line resistance. Shopify, S-H-O-P. All right, so on Shop, we had a sell right here, sell right here. We had a sell right here. And we had a buy right here. What's that? 905 up to 1085. Awesome trade there. And we have a potential sell. We have a sell. We got a sell on the 24th. And what I do is apply the trend line there. And I'm not going to take a trade until we get the trend line break. Trend line is respected for now. Netflix. See what we got on Netflix. We had a sell right here, 444 down to 402. We had, looks like a sell around earnings. If you took it, 526 down to 467. Another sell right here, looks like from 530 down to 467. And no trade since. We do have this T.P.I. Fast slow line. These are the green lines down, green and red lines down here. Talk about those in the members area. Let's see, ES, yeah, let's look at today's ES activity. So, holy cow, look at Bitcoin at 29,000. All right, S&P 10-minute today. Let's see what's shaking. All right, so we have really no signal today. We had a little sell here, nice little sell. It's like in the Asian European session, 34 down to looks like 30. If we're not getting a signal on the maybe a 10-minute, but we're looking for we want some trade setups, all we have to do is go down to a lower time frame. Let's go to like a 1 minute. Let's see what happened on the 1 minute. I'm going to come back to the start of the day. I didn't look at the 1 minute today, so I have no idea. This will be a first glance for both of us, or for all of us, I should say. So let's go back here to the cash open. Looks like we had a potential sell here. We do have a trend line that I would respect. So we have potential sell here. Oops. We have a potential sell here. Notice that coincides with the trend line break. That's at 9. Let's move forward. We have a trade to the upside. Let's go here. Long. Trade to the upside. Long. Trade to the upside. 22 up to 25, all the way up to 30. And then we have a sell, 25 down to 20, call it 21.5. Pretty cool. Yeah, let's go back. We'll look at crude today. All right, crude on a 10-minute, 610. We had a sell. Boom, down to 48.40. First target's at 10, that's 30 cents, all the way down to 47.65. We had a buy signal, 1150. Cleared this area at 48. Traded up to 48.40. 40 cents, it's $400 a contract. Damn, that was nice. Let's go look at 5 minutes. Anything on the 5? We had the 2 sell signals coinciding with that signal on the 10-minute, but nothing on the 5. Let's look at a 1 minute for you scalpers. And we have sell signal, some scalping longs, scalping shorts, scalping longs, and scalp short 35 down to 31. You can see the volumes obviously dried up. We're in the aftermarket going into New Year's. 6J and 6E, we take a look. 6J on, there's not going to be a ton of volume. Let's go to like the 10-minute. Let's see. We had a couple sell attempts here. We had a buy right here. That's what middle of the Asian session. Here's a European session buy. It's like we had trying to get a European session sell. And that was it for the 6J. We go to the 6E, the euro currency. Today on the 10-minute, we had some sells right in here in that price structure. You know, yeah, that's a good point. If you trade binary options, I don't really trade binaries, but if you do, you know, you don't have to be as precise maybe for trading futures. It all depends on your risk, but you know, clearly it's pretty dadgum accurate at picking these reversal points. So that's where you trade binaries. You could do those at those signals. Facebook, weekly and daily. Let's go to Facebook. The first one is a weekly. So here we had a potential sell. Notice we're in a strong uptrend. We also get into a trend market here. We also get into a trend market here. So we're trying to sell right around in here. We get a sell here. We start to get a break. We get another sell right here. Ends up being a nice move down. Takes us right to price structure, or pretty close. Notice when we get this trend line break, we do get a T.P.I line cross. By the way, talked to my programmer today, and he's working on adding another signal, maybe like a dot or something, when the T.P.I crosses, because the T.P.I fast slow line can also catch pretty good moves. So we may get, will just give us more activity for those that want to see more activity. Your higher probability trades are going to be when we have the T.P.I signals, the T.P.I arrows. So here's a perfect trade. We break down, we get a retest, clear rejection there, and we move to the downside. Where we target? We're targeting 135, comes down to, what's that, 140. And now we are looking for sell signals again. So get on a daily. So here are all those sell signals that we saw. Here was a sell signal coming in before earnings. And then here is that one that we got back on the 10th. So short from approximately 280, been down to 265. And if you're sold, you're still call credit spreads, fair call spreads, you're loving that sideways action. You're just collecting premium. Yeah, guys, you're welcome. Okay, a total 13 units have been taken. Again, we'll leave this up through probably the weekend. I'll work on trying to get a replay out, but it's really been my pleasure speaking to you guys today. YM, sorry, Jeff. Sorry, I missed that. YM. Assuming you mean YM futures. So it's going to be similar to the ES. So we had a buy there. We're looking for sells. Not advisable to take those against the trend line. Finally get that crack, and it moves to the downside. Didn't get a buy. We got a crossover here on the T.P.I. That would be probably a good an advisable spot to exit, and you get that bullish reversal candle. And then we start to get weak up here as we tested this area back in here. We get our break, and we move to the downside, and we reach our target objectives. Yeah, you're welcome, everybody. Yeah, I'll be looking for your email, support@seasonalswingtrader.com. Hope everybody had a great holiday if you celebrated, and I hope that you have a great one to come for New Year's Eve if you're celebrating that as well. Guys, I hope, guys and gals, I wish you all the best. Happy New Year's. Thanks for attending. Stay safe out there in health and in life and in trading. And I really look forward. I'm excited about 2021 and hope to see everybody on the inside so we can take care of this together. All right, talk soon. Shoot me an email if you have any questions, and wish you the best.